Hi, everyone. My name is Olufemi, and I'm the CEO at Veend. And at Veend, we're enabling fast and easy access to credit on demand. My team and I have experience over 15 years across payments and credit, and we're backed by Techstars and some other amazing investors. I'm ex-Flutterwave, right? I've built a lot of, I've worked with other founders in Africa, in Nigeria especially, to build successful startups. So we're solving the problem of credit penetration in Africa, right? And it's a very, very interesting problem because it's easy to lend, but the problem is collections, right? And the reason for this problem is it's hard to get data, right? The regulator says banks have to access data via the credit bureau, credit history. But in Africa, only 11% of the population have their data on the credit bureau, compared to 79% in Latin America, right? There's still an issue with unreliable payment collections. I come from a payment background, but I can tell you for free that payment in Africa is currently solved for e-commerce use cases, right? For the credit use case, it's still broken. A consumer that will either choose to feed their family or buy food or healthcare will rather do that than manually make payments for a loan. So the automated systems are still broken, right? Lack of financial inclusion, right? Only about 57% of adults in sub-Saharan Africa are still excluded financially. In Nigeria, we are seeing the rise of transactional accounts, which is still improving it, but it's still hard to access those data. And undigitized processes for businesses makes it hard to lend, and the lack of capital. And I'm going to tell you how we solve this problem, right, as I go on. So at Veend, we provide on-demand access to funds to borrowers with verifiable income. And we use a unique ecosystem approach that allows us to access data and deduct payments directly from the source of income of the borrower, right? And this reduces our risks. Now think of someone who earns salary on a payroll platform. We access salary history data and deduct payments from their source of income. Somebody who gets paid via a payment gateway, we access transactional data and deduct payment from settlement, or even an informal worker on a logistics platform. We integrate and get access to the number of delivery they make and deduct payments per delivery. The market is large. With our model, it's a 3.5 billion that's targeting 7% of the addressable African market that Veend can serve with this model right now, 2.5 billion SAM, and then some targeting just Nigeria, 5% of our addressable market in Nigeria. It's around $300 million. We have competitions, the commercial bank, digital lenders, and microfinance banks. But where we stand out is our ability to deduct payment from source and our ability to use alternative data sets to make decisions. And we're doing something very, very cool, right? The last problem I mentioned, which is the problem of capital, even if we solved all the problem of data, all the problem of collections, data still needs to move into the continent to lend to SMEs, to lend to individuals. That is broken today, and we are solving it by creating a product that allows other lenders on the continent to securitize their existing loan portfolio and make it available for individual and institutional lenders to then acquire the rights to earn the interest of those loans. That allows lending to scale. So far, we've disbursed more than $18 million since 2021, serving 314,000 borrowers. We've raised $510,000 in pre-seed funding, and we make $50,000 monthly. We are also cash flow positive. Thank you very much.
Okay, questions from our investors. Who would like to go first?
I'll go first. So you said $18 million is what you have disbursed.
Yes.
Could you talk to us about the performance of that loan book?
Okay, so currently NPL rate is around 3.3%.
Okay. are there lessons that you have learned? Of course, that's not a burden here, but are there lessons that you've learned that are informing then how you're making lending decisions based on the data that you've already collected from the 18?
Yes. So the lessons we've learned is, apart from the data and making that decision, right, the most important part is collections, right? And that's why we run the model where we deduct from the source of income of the borrowers where they earn, right? And for us as a business, we also discovered that the business model that works for us as a fintech is the interest income business model, where we earn a spread on the capital provided by our lending partners.
Maybe tell us a bit about your debt scaling, debt capital raising strategy, where you're raising debt from, and where next you're raising debt from, and how do you scale that?
Okay, so we deployed a very, very interesting in-house solution, which we are making available to the public at the end of this month. And what we did is, for each of our ecosystem, we have an SPV that lends directly, and then we partner with microfinance banks and individual lenders who buy the rights to the interests of the loans that we disburse. So which means when our SPV disburses a loan, automatically it appears on the dashboard of a microfinance bank. And they can put that on their core banking application. So see it as a synthetic loan to them. They can show it to the regulators that, hey, I disburse this particular loan via Veend. Now, to us, it's capital. To them, it's a loan, right? And so far, we've raised over $200,000 with this model. So we've not had to go out to the debt market to take additional debts, but as we disburse credits, banks are available to buy it off our balance sheet.
Where are you at in terms of your regulatory approval in Nigeria on the scale? So that's the first question. Second question, can you talk a little bit around the nature of the loans themselves? Like on our average, what's the tenor? What's the interest rate?
What's the size?
How does that look?
Yeah. Okay, so in terms of regulation, we currently run on a state license lending license framework right now. We are aiming to get a finance company license with the CBN of Nigeria. So currently, average loan size is around $60. Interest rate is between 5 and 10%, and we make a contribution margin of around 70% on the capital we raise. Now, going forward, because to be honest, the lending part of our business was an experiment to figure out how to make credit accessible, bring in the capital, leverage our technology for other players, right? So going forward, we are looking at attracting, customers like the IFC, the developmental banks, guarantee funds, right, who can leverage our technology and deploy capital to other lenders who then focus on disbursing those funds to what I call external ecosystems, right, where they also are able to deduct money from source of income of the borrower and prove that those loans will not default, right? And they leverage our technology to do that, right? So that's what we're going to be doing going forward. And with that, we're going to be able to earn recurring monthly fees on the cost of securing those loans. We want to implement something close to credit default swaps, right? And we are going to be earning a spread on the interest rates available from the capital provider and then and the own lenders, right? So that's the plan for expansion for us.
What are your main risks from your point of view, and separately, maybe tied to that as well, what keeps you up at night right now?
The number one risk is talent, right? The brain flight issue, right, that exists in Africa today, that's number one. The sovereign risks, right? And then the last risk is, I would say, ecosystem risks, right? Now, with our ecosystem model, we've been able to control risks in a way. But there's a risk that a particular entity, a user, a business, can move from one ecosystem to another. If they move to an ecosystem that we don't serve yet, then it's a risk. That's when default happens, right? So those are the major 3 risks that keeps me up at night.
Olufemi, thank you very much.
Thank you.